November around 12:41 p.m. Eastern Times. Good afternoon, everyone. And we're gonna enter today into what we call a new Elliott Wave, a new way to forecast the market using Elliott Wave, but at the same time, a new Elliott Wave. In other words, we use in Elliott Wave forecast techniques that they are for the old style Elliott Wave that was created back on 1930s, but we have added a lot of new things to a theory to make it more reliable. Like I say, my name is Eric. I'm the founder of Elliott Wave Forecast, which I founded around 2005. We are a group of analysts that we forecast 78 instruments around the market every single day in 4 different time frames. All right. So let's go ahead with what we're gonna be covering in the market in the seminar. It's gonna last around an hour. You guys can write questions right here in the panel that you have. I'm gonna be answering the questions. I would appreciate if you guys type the question when I finish the sessions. We're gonna go for different sessions that goes from the Elliott Wave cycles. The Greeks is key that you guys do understand is key that that everyone understand this. The first is the Elliott Wave cycles degrees. Second is the Elliott Wave structures. Third is the bullet sequence and gold, silver, gold, copper, stone stocks, and related ETF, the correlation with the rest of the market, and the next big swing and targets. So that's what we're gonna be covering on this. That's what we're gonna be covering on this. The first topic is the cycles degrees. Is the cycle degree. The cycle degrees is that, like everything, guys, you look into your life and you are a newborn, a kid, a child, a teenager, you are a young adult, a middle adult, an adult, then you are a senior and an advanced age, right? Those are cycles of your life. The theory also comes with cycles. So the theory also comes with cycles, and consequently, we use the cycles to understand. We use the cycles to understand where we stand and to express our opinion to you guys, to the members or the traders around the world. Why? Because you need to know that you finish a cycle, that you're gonna retreat, and you're gonna start another cycle. And that's how the market works. Have you ever seen the market move in a straight line? I don't need to hear the answer. The answer is an absolutely no. There is no straight line. And there is a reason why there is no straight line in the market. And the reason is very simple. It's because whoever buy the market take profit. When you trade profit, you're selling. And someone needs to lose, right? For someone to win. So the nature of the market create these cycles, right? The nature of the market create this cycle. Now, right here, understanding this, is going to help you tremendously in going into the next phase and understanding our idea during the seminar. As we always gonna do, we're gonna after each session we're gonna ask a question. As you guys understand this part, what the degrees and the cycles are, right? And the reason why they do exist, right? Everyone understand this? So next, we're gonna go what is an impulse. An impulse is the main structure within the Elliott Wave theory. The main theory say that the market move with the trend in 5 ways, and that when the 5 ways ends, the market correct in 3 ways. In other words, the market goes like this. The market goes like this. 1, 2, 3, 4, and 5. 1, 2, 3, 4, and 5. The market goes like this. The rules, the main rules. Wave 3 cannot be the shortest. Wave 4 cannot pass the beginning of wave 2. And within wave 3, wave 2 cannot pass the beginning of wave 1. And within wave 3, wave 4 cannot overlap wave 1. Right? So that's the main Elliott Wave impulse. That's the main Elliott Wave impulse. Right? Now, this is over here how it looks with the subdivisions. You got the same. In this case, it's an extension within the wave 3. And we're showing this because the gold-related instruments, most of them, they're doing this. They're doing an impulse, which an impulse in which the wave 3 is extended. In that case, in that case, what you have is what we call a nest. 1, 2, 1, 2, 1, 2. This is a triple nest. And the nest is seeing like 1, 2, 1, 2, 1, 2. It's through 3 subdivisions of 5 wakes. 3 subdivision of 5 wakes, right? And then an acceleration on the wave 3. And then an acceleration of the wave 3. Right? An acceleration of wave 3. So when that happens, you get back here, and this is the regular 5 waves. But sometimes within the wave 3, wave 1, or wave 5, there is something that is called an extension. An extension means that that impulse, it becomes much bigger in relationship with the other two. And consequently, when that happens, most of the time is because we have and nest like this. So in that case, what's gonna happen is that the market, it trick when they comes with the triple nest, the market trick the traders, because the traders, when you look from here up to here, you got 1, 2, 3, 4, and 5 is identical to this, but the market is nesting. And that what happens many times across the market. That traders get confused. They're gonna use the old Elliott Wave theory, and they say, okay, I got 5 weeks, let me sell gold, let me sell silver, and boom, the market trick you. Now, in Elliott Wave, we use something that is called sequences. In Elliott Wave forecast, we call something that is called sequences. What is a sequence? For example, when the market goes 1, 2, and it breaks the highs of the wave 1, that's called a bullish sequence. Why? Because 3 weeks do not make a trend. 3 weeks do not make a trend. Consequently with that, the market needs to extend on to reach the target. And the target is a minimum of 1.618 in relationship between 1 and 2 in order to finish the wave 3. In other words, the minimum target of wave 3 right here is the 1.618 or 1.2, right? Right? So the extension between 1, 2 needs to reach minimum the 1.618 of wave 3 and wave 3. So until you don't reach that target, you have what is called a bullish or bearish sequences. And if the new sequences is part of an old sequence or all 5 weeks, then you have it. You need to look for a 4 and a 5. As an example, let me go here. Let me show you guys the chart right here, so you guys understand it better. One second. Right. For example, let me see. Let me see over here. It's very simple. These are new tools that we use in Elliott Wave forecast. For example, this is 1, 2, 3, 4, 5 with all the subdivisions, right? 1, 2, 3, 4, 5 with all the subdivisions there. Everyone understand what I'm explaining, right? You guys can ask question here without a question. You guys can ask any question that you guys have, right? You guys can ask question. So right here, you got 5 weeks. Any question that you guys have, Jonathan, Rita, Ruan, everyone there, any question, Manish, any question, everyone understand, right? You got 5 weeks. After the 5 weeks, you have 3 weeks put back. After the 5 weeks, you got 3 weeks put back. Everyone? After the 3 weeks put back, what is the reason that the market cannot go without following the rules? It's because this is the way the market works. It's the market nature. There is a reason that you need to sleep, right? That's the way it is. So the way I see it, and the way that I want you guys to understand it, is That is how to explain what a sequence is. It's a language that we use a lot in Elliott Wave forecast. And the sequence goes like after 5, it comes 3, minimum 3. And when the 3 ends, it breaks the peak of the 5. That creates a bullet sequence. And it's gonna be extended. And if the 3 comes as it should after 5, then it needs to create 5, another 5 over here. And that's what you see in this chart. You got 5, 3, and another 5. And those 5, it comes 5, 3, another 5. And sometimes into the next 5, it comes the next. And the next is 1, 2, 1, 2, 1, 2, and the market accelerate. Now, before I move on into another stage of the seminar, right? Everyone understand what is a 5-way advance. Everyone understands what is a 5-way advance. Everyone understand what does everyone understand what is a 5-way advance in the Elliott Wave theories. Everyone understand what is a nest. Please, guys, answer yes or no before I move on. Everyone understand what is 5 waves. 5 waves, a bullet sequence, barrel sequence, and a nest, right? Great. Great that everyone understand it. Now, during the seminar, we're gonna use these 3 main topics: a bullet sequence, and the gold, and copper, and silver, some ETF that you guys might not know, but we track it, the correlation with the rest of the market, and what is the next big swing and the targets, right? So having said that, let me go here to the charts, right? For example, this is platinum. Platinum, it is a commodity. Platinum here has a low on October 15 of 2024. Since then, it has reacted. You should assume that the trend comes from here, right? Something in this neighborhood. So, platinum from here up to here is 3 waves: 1, 2, and 3. From here, the all-time lows up to here, how many waves do you guys think? See, my bad. Everyone should see there. Everyone should see there. Everyone should see there a 3 waves, right? From here, you got 1, 2, 3. And what is the main trend? Higher or lower? It's higher, correct? From 0, from the all-time lows around this area up to here is higher. So it has an incomplete sequence. You guys gonna see the concept. You guys gonna see the concept better with the other charts, because platinum has an incomplete data in its signal. This is palladium, another commodity. And then you have in palladium, this is the grand super cycle. That it ended in 2022. The grand super cycle has 1, 2, 3, 4, and 5. And from there, it did 3 weeks put back. Palladium, it should trade higher. This is the chart with labels here. This is the chart with labels here. Like I say, 1, 2, 1, 2, and next 3, 4, 3, 4, and 5. Right? That's the chart with label. You can move here, this here, if you're gonna make it a little more simple for you guys' eye. You see 1, 2, 1, 2, and next 3, 4, 3, 4, and a 5. And now Palladium, it did 3 weeks put back. So Palladium now is coming out of these lows, and it should extend there higher, following the other instruments related to commodities that they're calling higher. So neither Palladium with the 5 weeks here, it makes it very clear that it's bullish. And Palladium is about to make a huge move in the next 10 years. But Palladium there is showing a 5 followed by 3. Then we have copper. This is copper. The all-time lows. What do you have? The grand super cycle. 1, 2, 3, 4, and 5. This is 2011. And I want you guys to pay attention to the 2011 peak. It's a huge peak in the commodity group. And this is 2016. Another huge low in the commodities group. Same then, copper is showing 1, 2. Important what I'm going to say now. 3, 4, and 5. Then copper put back. But copper overlap here. This is the quarterly chart. Yes, correct. This is a quarterly chart. Now, let's pay attention to what I'm going to say now. Copper from the all-time lows to 2011. It hasn't reached the 1.618. Now, this is wave 1. This is wave 2. Correct? Everyone? Wave 1 can have overlap. Wave 3, like I said earlier, cannot have overlap. So, this is the quarterly chart. If I downgrade it to the weekly, right here, what happened? That from 2016, which is here, what do you have? You have 1, 2, 3, 4, and 5, correct? Ilum, you understand that, right? You got 5 weeks that ended in 2011. Everyone? Everyone see that, right? You guys agree? 5 weeks that ended here. And put back. And another 5 weeks to new highs. Correct? Now, this putback overlap here. And since then, copper rallied again to new highs in a very overlapping move. This overlapping here, this overlapping and this move is telling me that copper is nesting. It's doing a 1, a 2, a 1, a 2, a 1, a 2. Very good, Simone. It's nesting because the overlapping nature, right? The overlapping nature. And you're going to see why it's nesting, Simone, soon. So copper, when you look and understand, copper has a target that is going to put it very high. It's going to put it at around 940, about 10.15. And if you put copper and you put the popular gold in top of copper right here, you're going to see that copper and gold, they relate. But what happened is that copper is being lagging, gold is being leading, right? And that starts giving you why we are saying that gold can reach 10,000, that copper can reach 15, that silver can trade over 100. And you gotta be crazy in selling these commodities. Now, this is a silver ETF. This is a silver ETF. This is a silver ETF. Now, this is a super cycle, exactly, Simone. So, silver ETF ended 2011 cycle. The grand super cycle ended in 2011. From there, it did 3 weeks pullback and reacted very nicely on our buying areas on 2020. But it took the highs here and margin of break. As explained earlier, as explained earlier, when you break the highs and you haven't reached the target, that create a bullish sequence. Now, if we look over here, what do we have? We have 5 followed by 3, and then 1, 2, another, most likely here, 1, 2, and an acceleration higher. I will cover that in a few, Jonathan. Thank you for that. So over here, the ratio is a beauty. You're going to know why. The ratio is a beauty. Over here, this silver ETF, it has a target in wave 3 that started on 2020, it has a target at 87.66. And that is in full agreement with what the others are saying, with copper is saying. This is no casualty. You go and you take here copper and you put it in top of this ETF, and what do you have? It is the same trend, just that the second nest in copper is the low in the ETF. So this is a nest with the bullet sequence, and this is a nest that hasn't break higher yet. Does that make sense? So it's very bullish. This is another silver ETF. What is the difference here? It hasn't break 2011. It hasn't break 2011. Right? So, in other words, in silver related, yes, 16 is 20. Very good, Simone. Very good. I don't play fundamentals. I listen to them, I understand them, but our forecast is pure technical. So, for me, this one hasn't break 2011. It's lagging the other ETF. Right? It's lagging the other ETF, but it's showing the beautiful nest. 1, 2, 1, 2, and breaking higher. Right? Everyone see it? So this is pointing higher, and it's gonna take, it has a target that it comes around 130, 166. Right? I explained already what a nest is, Manish. Now, this is a gold related ETF. There is something that is called gold to silver ratio. Many traders don't even know that exists, Simone. Many traders don't even know that there is a ratio. A gold to silver ratio relate the strength of gold with silver, or silver related to gold, or weakness. And this is the ratio. The ratio from the all-time lows is also nesting. You're assuming that this is 0. And when I explain to you guys now the ratio, you guys are going to be able you guys gonna be able to understand what's happening in the market that some of you guys might not understand it now. So this is the gold to silver ratio. You got a wave one ending here, and then 3 waves put back and another leg higher. From 0 to these highs, the ratio reached the 100% extension. And since the peak in 2020, my bad, what's happening is that the ratio turned in favor of silver. Until 2020, silver was lagging gold. That's why you see a deep correction here on this silver ETF and not that deep correction in the gold ETF. Gold bottom first than silver. But the ratio now from this peak, in my view, it needs to do 100% extension putback here before higher. Why? Because if you look at the weekly chart here, the ratio is trading very technical. It's showing 1, 2, 3, 4, 5, 3 weeks put back, and now from here up to here, the ratio is also showing another leg lower. The selling of this year comes at the technical 100% extension, and is in full agreement with silver or the ETF. Let's use the silver ETF right here. Put it there on the ratio, and you're gonna see how beautiful it is. Right? How the secondary law and the ETF agree with the ratio. And how right here, this peak, this went sideways, and you see it there. How lower ratio is higher ETF. If we put silver with the ratio, it is even much better. You're gonna see the inverse correlation and the acceleration they started here. So the ratio is telling me that silver is lagging now, Simone. But silver is a better long than gold at this moment until the ratio reach the 100%. From here, silver around 43, silver will around gold. And that's why you guys can see here that silver, or that the silver ETF is entering the wave 3 of 3. The silver ETF is entering the wave 3 of 3. On the other hand, right here, the gold ETF already is in the wave 3. Everyone? Everyone do understand this? Right? So the gold ETF here, or the star, this is a star, no an ETF. Of course, it has an extended wave 1 from 0, an extended wave 3 from 0 already reached the target, the minimum target at 1.618 within the grand super cycle. But I'm afraid that it has also a nest 1, 2, 1, 2, and higher. Consequently, this ETF is going to keep extending in a series of wave 4s and 5s. Within wave 3, then do a wave 4 and a wave 5 when the ETF observer finish wave 3 from 2020. As you guys see, guys, we need to be crazy to be selling gold and silver and selling the commodities. Right? We have to be crazy. Right? It would be at one moment, Simone, it's gonna be a correction, like it happened from 2011 to 2016-20. The same with the indices. They always think about it. Answer my question, my friend. 3,000 years ago, how do we live? We live in caves. No, 3,000, 4,000 years ago. We live in the jungle. Exactly. How do we live now? We have electricity, air conditioner, internet. We can go from one. It took 3 months to go from Europe to Cuba in the 1500s. Now you go from Europe to Cuba, you go in 8 hours, right? It's called progress, human progress, animal spirit. The indices, gold, silver, and the metals, always gonna be bullish. There will be moment that they're gonna make a low, that they're gonna make a correction. That happens in 2016, 2020. Why you didn't peak from 2020? I don't understand your questions. We were buying, we were screaming to members to buy commodities. We were screaming buying the indices and the commodities in 2016. The correction should happen more or less, Carlos, at the same time that the index is correct. Exactly. That's at the end of the seminar, Carlos. So, explain your question in room. I can answer. So, the ratio is giving you the indication of where we're going. Now, this is another stock of gold. A one, exactly, Jonathan, I agree with you. And I'm going to show that at the end. Reminds me, please. Reminds me. I'm gonna cover, don't forget about that question, Jonathan. It's very good question. Very smart question, to be honest with you. Not many people do that. So, I'm going to show the targets at the end. Read that for gold and silver. I'm going to show everything. So, this is an stock related to gold. Let me keep going. This is 2011, 2012, 2016. And look at the price action. Look at the price action. This is a cycle, the grand super cycle. The grand super cycle correction. Another cycle here. Another cycle here. Look at the overlap. And now, this acceleration. So, if you look at it, Let me see. If you look at it, how many waves do you guys see from here up to here? How many swings? How many swings? 5, right? One of the rules that I mentioned earlier, I say that in the 5 weeks advance, wave 3 can never be the shortest. It can never be the shortest. Right? Everyone? Good morning, Pedro. Everyone. Wave 3 can never be the shortest. So from here, this is the shortest. Everyone? That's the shortest, Jonathan, Pedro, Rita, Marcin, Ulum, everyone. That's the shortest. Right? Which is telling me that this is a nest. 1, 2, 1, 2, 1, 2, and we are in the powerful wave 3. We have a highest target that it put this stock very high around the 400, 500 levels. And that support gore, at the end of the day, it is the same. If I overlay gore here, you guys can see it is the same price action. One is more contracted, the other is more open. But you gotta use one to the other to forecast the other. Right? Everyone? So this Gore ETF, which is called Royal Gore, is supporting Gore, but Gore for a big extension, because all this nest needs to be resolved. This is another Gore stock. Looks very like Gore. You see 1, 2, 1, 2, and boom, the acceleration. In the most bearish case, it needs to do 3 degrees of wave 4 and 5, also very bullish. Another gold ETF, remember the gold to silver ratio before it was supporting a gold in relationship to silver, right? Right? So for me, right here, the way I see it, it needs to go higher. And then this is the ratio. Now, this is silver with labels. This is how, when we bought it in 2020, right here. And silver, this is the grand super cycle. You got the first that ends over here, the correction, and also comes with the bullet sequence. Also comes here with the bullet sequence. Why? Because it hasn't reached the target. It's clearly a nest. 1, 2, 1, 2. And clearly should be extending. And clearly from 0, and this might sound crazy, but for some of you guys, but I'm the same person that when silver was trading at 14, I was screaming to Elliott Wave forecast, remember, buy silver with the target at 16. At 60, my bad. I was mentioning gold to 3,000, 3,500. I'm there already. Now I'm extending my targets. And silver should keep extending. And this wave 3 should end between 72 and 91. From there, it should do a 4 and a 5 and do and reach 100. And then, Jonathan, and this is related to your question later. And then what's happening? It's gonna do an all-time grand super cycle correction, because the way the market works, it works like this, guys. This is the beginning, 0. It goes 1, 2, 3, 4, 5. Those 5 at the beginning, what they are the grand super cycle, right, Jonathan? You understand, Jonathan Elliott Wave? Very well, right? Those 5 here, at one moment, it is wave 1 within the grand super cycle, correct, Jonathan? At one moment. Everyone understand that? Now, after this correction, the market does this, and it do another 5, create the bullet sequence. Here, it does a wave 4 and a 5, and it makes another 5. When these 5s are completed, you got another grand super cycle correction. So this is a grand super cycle correction. This is a grand super cycle correction. Do you understand that point? Everyone understand that point? The grand super cycle correct and extend. When it finishes the extension, correct the grand super cycle. That's the way it works. In other words, if you look at this chart, at one moment, this is the grand super cycle. Yeah, you will be able to answer the recording later. This is the grand super cycle. When this cycle ends, this is the grand super cycle again. So now silver, right here, is extending within the grand super cycle. At one moment, it will end the grand super cycle. But it still hasn't ended. So silver target is at 91.86. To end the grand super cycle should be around 110, more or less. And gold, right here, we nailed this buy. Members know that. We nailed that buy. And gold is leading silver. This is the grand super cycle gold. right here. Most traders, they only bother about the 5 minutes, chart or the 1 hour chart. Yeah, we know it. I can show you the chart. So this is 0, 2011, 2016. Already past the 1.618. I'm assuming that it's going to go for the 2.618. Right? And that extension comes at 600. At 6,000, my bad. It won't be in a straight line. It will be a series of 4 and 5s. Then it will put back higher to around 8,000, 9,000, or around 8,000. And then the grand super cycle correction. So the trend in the indices, in the commodities are far over. Gold ain't gonna just big. Just gold is going to decelerate compared to silver. But it's gonna keep trading higher. Because at one moment has a zero barrier, right, Pedro? There is something that is called the commodity index. Sometimes the wave 3 in commodities, the question is, it is true that wave 5 for commodities is usually the standard. The way I look at it, Laster, commodities is when you can see wave 1 extended or wave 5 extended. I doubted that gold is going to have a wave 5 extended. It's a very standard wave 3. There is something that is called the commodity index, ETF, right? Right? The commodity index, ETF, right? And that commodity index ETF this is 2008, this is 2011, right? This is 2008, 2011. It reached the buying area. It's lagging big time the other, Jonathan, right there, Pedro, everyone. And the reason why it's lagging is because of oil. It's because of oil. Right? It's because of oil. Right? So this is an ETF that track all the commodities together. Right? This is an ETF that track all the commodities together. Right? So this ETF, in my view, at one moment is gonna rally, and we can do the same. It's lagging big time because of oil. But don't pretend oil to be that weak for so long. Right? It has a target at 48. If you get oil, this chart is heavy. It's a heavily waver in oil. Yeah, the moment that oil bottoms, this ETF is gonna fly. So this is oil here. Let me overlay it. And put it with the commodities ETF. And you're gonna see it's been holding when you compare it to oil here. It's been holding. You see the peak together, the bottom together, but it's waiting for oil to finish this correction in order to rally. But when this rally, believe me, gold ain't gonna drop, silver ain't gonna drop. You're gonna see it here. They're gonna be supported. So overall, I hope you guys, I agree with that. That's when I hope you guys understand why gold should see 6,000, why silver should see 90 to 100, why copper should see 11 to 12, and why selling, we screaming to our members. I mean, every single every single every we cannot cash, and we put a lot of emphasis to our members in what we call the right side, and what we call the right side. And the right side is what matters. And I'm providing to you guys today what the right side is. Right? And the right side is the side of the commodities, not the side of the dollar. Right? And the right side is buying gold and silver, copper, and all these ETF in any pullback, given time. And understand this. It is that the market do not move in straight lines, that the market advance and pull back, advance and pull back. And we told members every single day not to trade, not to sell commodities, not to sell indices. Because selling indices, selling commodities is trading against the trend. So our view is very clear. The right side is the long side, is the buying side. Selling then is wrong, because the highest degree cycles are very bullish. Now, the gold can do a pullback? Absolutely. If you look at the chart, we're calling a pullback soon. It might not happen. That doesn't make me a seller here. That doesn't make me a seller. That makes me a buyer in the dip. That's a different concept. Silver here, it might pull back soon. That doesn't make me a buyer here. A seller, that makes me a buy in the dip. That should answer your question, reader. But traders believe that what they call traders, they have to be trading. And that's wrong. A trader is like a hunter. When you're hunting, you hide yourself and you're waiting to get a good shot. And you are a warrior and you are boom, 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 boom. It's different. A good hunter, you're waiting and you take your shot. The shot in the commodities is waiting for them to put back and keep buying it. This is not 5 ways in silver right here. This is not 5 ways. This is 1, 2, 1, 2, and possible 3, 4, or another nest. That will be determined by the indices. Right? And now, I want to, before we move to the next topic, which is the correlation with other markets. Does everyone understand? Now, everyone understand our view in the market about the commodities. Why the bullish, the reason behind, and what are the targets? Everyone understand that, right? All right. Now, we're going to take a look. Remember, because you don't trade against the trend, Laster. Because there is no guarantee that it's going to reach to 45. There is no guarantee. Because this wave 1 and wave 2 can be here. Right? You don't sell because Elliott Wave is suggested. You understand that, Laster? Elliott Wave suggested. Very suggested. You agree? It's a stunning suggested. What I'm providing to you guys is a new way to use Elliott Wave. Yes, I use the overlapping to deny a wave 5. That's Elliott Wave. I use the overlapping to come out with the idea that the best way is a nest. I use the new highs on the silver ETF here to tell you that it's incomplete and create a bullet sequence. That is Elliott Wave, but no forecasting. Sorry, no labels. If you notice, I'm not using labels in my forecast. Have you noticed that? Have you noticed that, right? No labels. Labels is a language, not a way to forecast. And you can see silver, and I can put it like I have for members, like members seeing this. But guess what? And now we're going to pivot to the multi-market. This is Netflix. And you're going to say, my gosh, what Netflix has to do with silver? And you think that, right? It has a lot to do. Because it's part of the market. This is Netflix. But what I'm showing to you guys is another way to see the market. Not the orthodox way that many use around the market. This is Netflix. Right? What is the trend in Netflix? Bullish or bearish? Laster. I'm going to pick you so you understand. Bullish or bearish? Bullish, right? So, this is zero. This is the grand super cycle. Exactly, because you need to use the right way to use Elliott Wave. So, look, it reached the target. Perfect. But Netflix can be laboring in many ways. This can be one. This can be two. This can be one. This can be two. This can be one. This can be two. Or this can be three and do something like this. Correct? That's Elliott Wave. Elliott Wave always give you more than one path. It's like the old ABA, NBA slogan. Fantastic. Always give you what you want. You want to be bearish? You call the peak and bearish and nifty, and you put 1, 2, 3, 4, 5. Elliott Wave is going to be, Elliott Wave, Mr. Elliott is going to be happy. You're not violating any rule. For me, this is very simple. Netflix is at the E-collects, at the buying areas here, which is going to support gold and silver. And it needs to bounce at least. If Netflix ending doing this, and this is how we kill the suggestion. If Netflix does this, silver will do this. Like we're calling it here. Correct? But what about who say that Netflix needs to do this? So when we explain it to our members, we always give you the areas to buy and sell, the right side, and we do 8 hours, almost 8 hours every day of live sessions. So our members are capable to understand the thinking behind the screenshot in our forecast. But Netflix can rally to new highs from here because it's 3 ways, no 5, no 6. It's plain simple here, 3 ways. Right? Plain simple, 3 ways. If Netflix goes now and break those highs, silver, the count in silver was that you put back was here. And this is going to fly like an eagle. And then you got to throw the Elliott Wave count and they put back into the trash. And guess what? If you're selling, you lose. You understand our thinking? We use Netflix to call silver higher in the 1 hour and the 4 hour, because Netflix needs to bounce. And we're gonna look at Netflix and see where they are. I give you another example and how we use to forecast the market. This is a Bitcoin ETF. Right here. This is a Bitcoin ETF. Right? Netflix, I'm talking about Netflix because it's within bouncing areas or buying areas. I can use also a bunch of stocks like Boeing is within bouncing areas. And bouncing, by the way. Like Meta or Facebook, Microsoft. They are all within, this is NVIDIA, my bad. Microsoft. Meta is within bouncing areas and bouncing. Microsoft. So all these bounce and these instruments support the commodities. This is Boeing. I already showed Boeing. I'm missing another one, Microsoft. Within bouncing area. If they react, commodities react. Exactly, Jonathan. At the end, it's very simple. It's yen weakness, yen strength. Reason, resolve, whatever you want to call it. Right? What I'm saying is, why you don't sell the commodities? Because the stock, they're giving us an opportunity to buy, at least into a bounce. But if any of these stock breaks these highs, this was your wave 2, and we're going to start flying again after the pullback. So this is how we relate all the groups or all the market to commodities, because we understand they are the same train. We understand they are the same train. I was mentioning a Bitcoin ETF is lagging. And it still needs, in my view, a bounce and another leg. If this happens, then Meta is going to do this, Microsoft does this, Silver then is going to do this. Right? If that happens. The thing is that I don't know for sure if it's going to happen. So as a professional trader, I play first the bounce in all those stocks. And I reassess where we are with after the bounce. Why? Because this and this bounce, it can do this and sell. And then that bounce in the ETF, the Bitcoin, Meta can create enough separation and then put back. And the put back, you got the stop, the ETF, Bitcoin ETF at the string buying areas, and then the correction in the commodities at that magnitude never happens. So forecasting is dynamic. Forecasting is dynamic. The right side is what matters. Elliott Wave is very suggested. The way that is used by most and explaining in the book is very suggested. Everyone, is very suggested. Right? It's very suggested. But what we've done is that it's not Neo Wave or nothing like that. No. We're calling the new Elliott Wave theory. We have the copyright of our system, and we had added a lot of new techniques to the way to forecast the market. But one thing for sure, it eliminates Simon Jonathan manage a lot of the suggestion of the old Elliott Wave. Right? So overall, this is how we see the commodities. Honestly, this is a very good question. And it is a dilemma at the end. Eric, how do you see silver from the peak? You mean from last week peak, right? Juan? It looks like a 5 weeks. And that's what we're calling a 5 weeks. Right here. Right? That's how we're calling. I don't need hyperinflation. Like I said, Gregor, very simple, my friend. I don't trade based in fundamentals. I understand the science or the relation thing, but I found fundamentals as much as suggested as Elliott Wave. Does that answer your question? So I found a way with my God-given ability to find a way to beat the suggestion of Elliott Wave. I'm not interested in find a way to beat the suggestion of fundamentals. I hope that answers your question. Now, Ruhan, this is how we're laboring with respecting the 5 weeks. But I'll be honest with you, it can be completed here, this way. Right? Another question before I jump into the last instrument. I always thought the market is labeled for the last significant low. Wrong. Wrong alone. The market needs to be labeled from the all-time lows. Right? you're great. How you doing, my friend? How you doing? I hope everything is great with you in the beautiful Poland. Right? I'm saying that silver should be looking for new highs. Contact me in Sky, Greg. I enjoy your conversation. So, overall, guys, overall here, the message is don't bother, and don't care in selling gold and silver or commodities. Right? Don't bother. Don't pay attention to every putback in gold and silver is an opportunity to buy. Right? Every putback is an opportunity to buy. And I don't recommend selling. Right? So, to put a conclusion before we jump to the final conclusion, the message that I'm transmitting to you guys is fundamentals are suggested. I'm going to answer all the questions, please, at the end. Let me talk. Fundamentals are suggested. Elliott Wave are suggested. We have added a new way of looking and forecasting the market. It's a mix of cycles, sequences, time, high frequency trading, correlations, Elliott Wave. It's not pure Elliott Wave. Besides a system that we create that we use in order to be able to know when the cycle ends. Our system called from higher commodities in the grand super cycle for the next 4 to 5 years. We hire targets that we're going to share again at the end of the seminar. We use a lot of correlations. Last, I would say, for those that missed the boat, and Gray, you know my thinking in 2012, 2014 about gold and silver. There is something that is called a interest rate. And this is a very interesting chart. Right? Let me see what I have here. It's this chart. This chart, many traders don't even look at this, Jonathan. Right? 1 second here. And let me contract it so you guys can see the all-time chart. All-time chart. 1 second. All right. These are the interest rate. Like I said earlier, the market, you know where the yen goes, you know where the market goes. You know where the interest rate goes, you know where the market goes. Right? That's the way it is. Forget about the individual names. It bothers me tremendously, Jonathan, the following. This is the interest rate cycle. This is the 10 years note. From 1981, the bottom on 2020. I'm not expecting the Fed rate goes below zero. But the way I relate this to commodities is that this is a warning for commodities and indices. A warning that within the next 5 to 10 years, we're going to have a crash across the market even bigger than 2018, 2008, 2007 correction, 2000 to 2007 correction. But not there yet. This is silver, and this is the rates. The theory is that when this trade higher, the indices slow down. When this trade higher, silver sell. Right? So, look at the trend, how they agree to the outside. Right? So, the interest rate, in my humble opinion, ended this cycle. It ended that cycle. And it is showing a very nice 5 weeks from the lows. Now, my guess, exactly, my guess is it's going to do this. It's going to do 2 paths. To allow all these bearish bullet sequences across the market to resolve. Or it's going to do this. In other words, it's going to remain contracted for a period of time before an acceleration higher. But this is a warning. Why? Because the moment that this peak or bottom, it means a strong yen. Right? It means a strong yen. And a strong yen, it means lower indices. But we are not there yet. So we still have some good years ahead. I don't know what's going to happen in the war, but I can say that in a few years ahead, there's going to be a financial crisis, most likely. But we are not there yet. I don't want to leave you guys with bad news. Good news. Buy commodities and every pullback. Never sell the commodities. Never. When you wanna sell gold, find a forex instrument to buy. Find something to buy that trade contrarian to gold. Don't sell gold, silver, commodities in general. I'm going to give you guys my targets for the next 5 years. And it comes with silver We silver target around 87,100 and extension 110. We gold target right? The next target, it should be around the 2.618. By that time, silver should be around 90. And then gold can see even 7,000 in the next 5 years. Copper, right here, you can see a target around 950, 940, then around 11. Palladium, Palladium, here, and this is another thing, Stephen, everyone there. If Palladium breaks the highs, that's going to create a grand super cycle sequence. And that's why people that trade, you see that targets, now they can open. Because when I bought a lot of physical gold in 2014, my target in gold was around 3,500. Now it's 7,000. Why? Because the market's talking. Why? Because silver to those highs. But palladium can be the silver in 4. Now palladium can be the silver in 5 years. Right? And palladium target, it comes very high. No, the palladium highs or target comes very high. It comes first around 5,000, then around 7,000, 6,500. And the other one, platinum, target first comes around 20, extension 25, 30. I got a few questions. Yes, can we look back at B2C? I don't understand your question, Diane. If you can elaborate a little bit and provide the time frame, I will answer. Eric, could the rhetoric crisis take place when the index finished the current cycle? No, Carlos. And thank you for being here. Why? Because the indices are not ready to crash. Sorry, I'm very bullish. Always been, but I know when to say, wait, take a little bit the foot out of the gas. Right? We would like to include palladium, platinum, but not right now, because we like to keep the same format. 26 instruments for group, but if we remove some, that would be the next one. Now, I was saying that the indices are not ready to crash, and there is a reason for it. It's called the FTSE. Right? Oh, now I get you. 1 second, Diane. This is FTSE in the grand super cycle. Right? You use the same theory. You got 1, from 2000, the flat that did almost every trade. Look at FTSE here. Corrective, right? Carlos, corrective. It's an impulse, overlapping here. You see that? It's overlapping. Don't you agree, Carlos? So, if you look at FTSE, Grand Super Cycle ended here. Started the wave 3 here. It has it overlapping. This is a nest. 1, 2, 1, 2. And guess what? The next swing make the third the shortest. FTSE is nesting. If FTSE is nesting, it means that it cannot be completed. FTSE is going to stand tremendously. It's going to reach around 14,000. If that happens, my friend, silver is going to fly like an eagle. S&P is going to fly like an eagle. The question is, no, if this is bullish or bearish. They are all very bullish. S&P is going to fly because everything is the same, guys. That's the point that many traders miss. That they want to trade gold, but they don't know what S&P is doing. They don't know what the interest rate is doing. They don't, and that's wrong. Right? I'm going to answer Diana's question. I hope answer your question, Carlos. And I need to finish, guys, in 3 minutes. This is the question. Right? And the questions say, let me see. My gosh. A lot of questions at once. I got lost a little bit here. The questions say, Eric, can you look back a little bit? If there was an AB, are you mean in the highest degree time frames? You mean in the highest degree, Diane? Right here? No, it seems like the 5 weeks are real. The 5 weeks are real. Yeah, this is a new cycle. And our technique, this is a new cycle. And minimum is going to do an ABC higher. But the question is this. This is when COVID. Look at the nose right there. It's 0.45. What happens? That if you trade below there, the Fed needs to go below 0. So, guys, that's the message. Very bullish indices, very bullish commodities. No in a straight line, but don't sell them. Wait for pullbacks and buy it. I just want to wish you guys all a happy Thanksgiving for us like me that we live in the U.S. Happy Thanksgiving. We always need to give thanks to God. And if you guys want to join us, we just launched a new promotion. The Black Friday promotion is up to $500 off in memberships and seminars. Join us. Just click here. You're going to have at least 2 months for the price of one and even an extra discount. It's a very aggressive promotion. It's good in these times of the market. Why? Because you need a lot of answers. You need answers if gold is going to correct, if the correction is ended, same with silver, same with the indices. We do 8 hours of this session, guys, every single day. 8 hours from 6 in the morning until 2 p.m. 8 hours or 1 p.m., almost 7 hours every day live. We provide trading ideas. Look at, we are a, no, because you don't need, it's not too much. You never, it's never too much to instruments to cover. Look at silver. We nail silver in this buying because we provide the buying areas. So you're going to look at silver when we bought it here. We bought it here. We bought it here. You're going to get a lot of help. So join us. If you want to have this every single day in your life and make a lot of money, join us. We are 130% positive for the years. I believe so, Ruan. I believe so. Join us. You won't get disappointed. Open your mind. Join us. We're going to help you a lot. Thank you guys all. See you guys around on to the next free class. Have a good day, everyone.